Hi there, thanks for joining me right here on The Nation, a show where we like to address topics that concern all Malaysians around the country. My name is Jessie Chahal and my guest in the studio with me today is Mr. Balasubramaniyam Sreedharan, who is the founder and director of Masterpiece Trainers. And we will be talking today about financial knowledge and about how you perhaps could stand a chance to trade in the Forex market and a lot more on that. But first things first, welcome to the show, Mr. Bala.
Okay, thank you.
How are you feeling today?
Yeah, very fine, very fine.
I look at you and I'm seeing ka-ching, ka-ching, dollars and cents, dollars and cents. But we have so much to talk about on this very topic of finance, which is of course of interest to, I think, every person on this planet. Do tell us a little bit about yourself, perhaps, how you got started and a bit about the company Masterpiece Trainers.
Okay. I'm always very interested in this part of currency market or stock market because my field of studies is about economics. And I did research during my university studies about banking. So then I get used to meet people who always talk about this financial field. Then I get interested into it, I learn about it, I do trading, I do training, and then once I see that, then I want to pass this knowledge to the general public.
For every person, every Malaysian to be able to understand or to have some kind of financial knowledge. Now, you say that the center is the center that you run is mainly aimed to create awareness towards the importance of people having financial literacy. What does this mean, financial literacy?
Okay. First of all, this Masterpiece Trainers we created to make sure that this understanding about managing your finance, so let it be personal finance or your company finance or the nations, let it be. We want to pass the message that managing the finance is more important than to make money. So we run seminars throughout the country to just create awareness of the importance.
What do you think is the current financial knowledge level of a typical Malaysian? Do we know enough about what we should know about finance?
Okay. This will be answered by certain statistics. Okay, so we can see newspaper coming out every time, credit card defaulters.
That's right, which is a huge issue.
Yes.
Because I think most people below the age of 35, about 80 to 90% are involved in some kind of debt.
Yes. Why? Because they do not know how to manage. So how do we going to solve this problem? It is not by telling them not to buy credit cards. No, it is very important nowadays. But how to manage? Why it comes to the youngsters? You know, youngsters are very enthusiastic in trying out new things. Let it be a financial market, let it be a current business, new business ventures, everything. But do they have correct knowledge of this finance to start something so that they can sustain all the way?
A lot of times, I think with cards especially, they call them the plastic, you know, you keep swiping them, you don't realize the debt you get into, and then it snowballs, and then you just get buried in all that debt. But what do Malaysians in general need to know about financials and what kind of knowledge should they have about that?
Okay, generally the Malaysians are lack of this knowledge. Okay, because this financial literacy is not a common topics within them. If you ask about the investments or property, many knows about property, buying house, shop lots, yes, property, yes, because it's a common topic. But finance is not a common topic within all Malaysians.
I think the perception is finance means you must probably either have studied finance or maybe you're an accountant of some sort, you know, or you must have very deep interest, or you must be very smart, or you must be very rich to be able to dabble in these markets, right?
Okay, but actually misconceptions.
That's
it's a
right.
misconception. So we know that all the while we are in school learning a lot of things, but most of the time in after school life is involving finance. We are looking to earn money to sustain our life, and we must know how to manage the money to sustain us. This is the big portion of the life, but this knowledge is not much we get from your early life educations. So now what we have to do?
Yes.
What we have to do? First, you must know that managing finance is the most important thing. It is not how much you earn. It is how much you save from your earning.
Oh,
That
yes,
matters.
yes, that is a golden rule, isn't it?
Golden rules. Okay, maybe the difference of earning between persons are different, but the saving means not the amount itself, it's the percentage out of your income.
That's right.
Because the saving one day will become your investment, and the investment will give you the income again. We are not going to work all of our life
No.
and they give us 55 years old to be retired. So we must create and generate income. For that future, what you have to do now. That is financial literacy. It is not doing what we have to do now, the next day we do not know. No. Sit now. Wait for the fruits.
Plan it out now,
Yes.
save now for that long term, and if one chooses to start investing in some kind of business or even to play the foreign exchange market,
correct.
then to make that kind of savings and
Vintage.
allocation
Correct.
for that. Well, let's look into basically how we can park some money into the foreign exchange market, how we can enter into that market, what we can do when we talk about foreign exchange. Maybe first question might be, what is foreign exchange? Forex.
All right. This is normally people think it's a very big and big things to know. It is maybe not related to me. So no, when we talk about foreign exchange, it is just a simple term that if you're staying in Malaysia, you are a RM holder, Ringgit Malaysia holder. Any currency other than RM is your foreign exchange for you.
Okay.
If you are in the US, you are a US citizen, any other than US dollar will be the foreign exchange. That's a simple meaning.
Okay.
Okay. Now, this foreign exchange, they are rate determined. The rate or the value of your currency is just determined by supply and demand. Just an example, if you want to create, let's say you want to price a car. How you price a car? You see what are the demand for the car, how much you can supply. Same things goes to currencies. There is a demand for the currency and there is also supply of the currency in the market. The rate are decided just because of supply and demand.
Okay. So people who enter the market are playing this game to make a profit. So they put some investment in there, see how the market goes.
Okay, that is about, that is when you come, you want to trade currencies.
Okay.
Okay, when we talk about only the foreign exchange, we just need foreign exchange only for one purpose, when we wanted to pay the exporter.
Okay.
That means if you buy a car from Japan, that means Japan is an exporter. So they have to pay in Japanese yen.
That's right.
That means take a RM, convert into Japanese yen, then you pay.
And
this is how the normal currency market works. So foreign exchange is important for us because we got no choice. We are in an open economy. When it's an open economy, we involve in international trade. International trade means you have to convert your currencies to pay the international exporters. That is where we need these currencies. Okay. Trading is another part of it.
Which we will come to in a short while. But overall, why is Forex important to countries and is particularly to Malaysia? What is the main importance there? What is, if we don't have Forex, how much will we be affected?
Okay, that's good. If you don't have the Forex then we cannot do
Any
trade at all. Trade at all. And foreign currency decides certain rates. Like now, $1 is very near to 370 of RM.
That's right.
That tells you that you want to buy something from US or US people want to buy something from Malaysia, this is the rate. This is the rate. So, when you know a rate, you can buy or sell something, whether it's a product, services or currency itself. So that's why the foreign exchange are important. Not only for that, this is, we are talking about micro level. If we are talking about Bank Negara, they have reserves of currencies, foreign currencies. Normally banks have reserves, central banks have reserve of gold and US dollar reserves. We need that. That's where we balance the economy.
And especially now when it's not looking so rosy for us, I think we'll need to put up a bit more of the, of the backing in our little treasure box there. But what are some of the factors that drive the currency of a country?
Okay, currency value are decided by supply demand. There are factors that affecting the supply and demand. Number one, export and import. In a simple language, they say export is good. People say export good. Why? It creates demand for the currency. Then currency value will increase. Import is bad, we call this. Why? It creates supply of the currencies, where the currency value will go down. Then the equilibrium point decided the rate of the currency. So if you ask me what drives the currency, one, import and export, whether it's product or services. Second, investment or flow of currencies out or in. We call this outflow or inflow. Maybe, let's say, a big company, giant companies of our country want to invest in foreign countries. So when you want to invest in foreign country, it's an outflow of capital. Later, it will give you a return. It is an inflow. So when money goes out, the value drops. But don't forget, there is a purpose the money goes out. Why? Because later they'll have a inflow of it, then the currency value will increase. This is how the cycle works.
So the more it goes out, chances of the inflow is higher, increases the value of the dollar or ringgit.
Because sometimes we invest locally, domestic investment, or we invest internationally. So the fluctuation will be always there because the flow of the money. Okay, supply and demand, import, export, inflow, outflow of the money because of capital investment. Other than this, there are few factors also in fact affecting our currency value. One, sometimes the government or the central bank, we call this, wanted to maintain certain level of price so that business runs smoothly. It will be fluctuates, but fluctuate within certain range.
That's right. No shocks.
No shocks. Because if it comes to a shock, very hard for a long-term business to make deals. So they let it flow, but in certain range.
I see. Okay, and then we come to the topic of Forex markets per se, because people can also now trade in these markets to have an inflow of income. Now, it's a fast-growing financial industry. Who is involved in the foreign markets?
Okay. Whoever involved in international business are involved in currency market. Not directly, but indirectly. Okay, number one, bank. The biggest institution that involved in currency market, number one, all the central bank of a country because of the international reserve that they hold. Second, any commercial banks involved in this market because the transaction is in currencies. Other than that, institutional traders. We call these institutional traders, mean big traders who make a huge amount of money through this currency trading itself. Other than that, brokerage companies, fund managers, hedge fund companies, literally everybody.
Literally everybody. and even a normal person can get involved in the Forex market.
Okay, that part is before 1997, there's only these institutional traders and investment companies are involved in trading because it's some sort of like big things for to be handled by normal retail traders.
We're going to take a quick break though, because it's time for a commercial break, but when we come back we shall continue the discussion on financial knowledge with a zoom in into the Forex market, so stay tuned. Hi there, thanks for staying tuned to us right here on Bernama TV. You're watching The Nation and my name is Jessie Chahal. But with me is my studio for today, is my guest in the studio for today, Mr. Balasubramaniyam Sreedharan, who is the founder and director of Masterpiece Trainers. And we're talking about the financial knowledge in general, but of course also with a zoom in into the Forex markets. Now, Mr. Bala, before the break, my question to you was who is involved in the Forex market? And I think from there, let's look at how big is this Forex market that we're talking about? Okay,
if you ask me the volume of this market at the moment, it has grown up to 5.3 trillion US dollar per day transactions.
Per day?
Per day, 5.3 trillion US dollar.
Wow. I don't even know how to compute that kind of money. Yeah, it's
That
big.
big is the market. That means literally all the countries, central banks, commercial banks, everybody involved in this. So how do I get to benefit from this?
Exactly. How does normal people get to play this field as well, for them to make, I wouldn't even say a quick buck, but for them to invest in this and make money from the Forex market?
Okay. Before 1997, there's only institutional traders can trade currency. Banks, yes. After 97, there was a law approved in London, actually, by Brian and John Wood, his name, okay. What happened is, there was a crisis where the money is only held by these big giant banks and everything. They are most of the time concentrating on making profits. But when the crisis comes, these profit-making bodies are not much concerned about the development of the country, but they are holding all the currencies and the
That's
values.
right.
So what happens is they open up to retail traders like you and me. Why? Because if you are staying in a country and holding a currencies, whatever factors that affecting your currency must be your concern. If not, I have no decision about my currencies, but some other decision affecting my value, then it's not fair. So let me decide what I can do with my money.
But such big banks that are looking into that, then people like you and me, 1, 2 people here, 3, 4, 5 people there, can we collectively make that difference?
It's not the difference they make because we are collective. The difference are made because are we educated and are we trained enough to handle the market. The market gives opportunity equally to everybody. Can you handle it? Are you trained with so-called professional in it? That means you need educations. You need market literacy. Then you get into it.
Now, anyone can do it, that's what we're saying. But what is the difference between parking this money into the Forex market, playing the Forex market, or investing?
Okay.
What is this difference?
It's very simple. Investing in currency market, Forex market, is not only just a currencies. With currencies, we can trade anything, maybe not domestic products. Example, you want to buy a share in our country, just go to the stock market or online, sitting at home, online, our stock market, KLSC, you just buy a stock of a bank, stock of a telecommunication companies. But we want to buy a stocks of foreign companies. Nowadays, people know the phones, smartphones are very famous. Buying a smartphone for 2,500 ringgit, so I think that's the price around there, is that as important as buying the stock of the company? You're buying iPhones, yes. Are you thinking that when people are buying iPhones, the Apple company share is going to shoot up? Why don't we invest in that Apple share rather than first invest in the iPhone?
Everyone runs for the phone first without thinking.
You should have run for the
stock.
company shares first, the stock of the apples. That's where people miss the investment opportunity, we call that.
And you can make profits from that. You can make money based on your investment, based on your knowledge in doing that.
This is where the Forex trading helps you. It's not about buying currencies, it's about buying stocks. It's about buying commodities. It's about buying precious metals. You can go to the bank and invest in gold account. You can go to the normal shop, physically buy gold and keep. You also can go to the trading platform and bet on gold.
Now, it's really interesting when it's simplified the way you have put it so nicely, because it seems like it's almost like a cardboard game, and it's a matter of practice, but it's also a touch of luck. Do you agree with that, or you have a different perspective?
Okay, talking about luck, let me tell you these stories. Most of the time, after our school days, our university days, most of the time we involve in the making money process. That means we work, we do business, we want to make money. When I see this market, which is 5.3 trillion, that means most of the market money in the world are in this market. So you want to catch fish. I always tell my traders and those people I met, you want to catch fish. There's two ways. You can go to the sea and catch fish, a lot of fish that you want, or if you don't want a risk, just stay at home, catch in your aquarium.
Oh, it's right there.
It's right there, no risk. But how much you can catch? You want more, go for the place where there is a lot. You don't want risk, you so-called risk, then be at home. So open economy means we are in the open sea. You want to catch fish, you have to go to the sea. But be prepared before you go, meaning you must know how to swim. When you fall in the sea, you must know how to come back alive.
Yes.
So same goes to this market. It is like a sea. There is a wave. There is a thunder.
Sometimes tsunami.
Tsunami. So you must know how to save yourself. That's where the education, the financial literacy helps you a lot. Otherwise, people just jump into this market thinking that they are doing great things. Normally they say the wow factor is there. People look high on you. Wow,
Yes.
you are in a stock market, you are in a currency market. But that doesn't give you any edge on the when making money things.
Right.
So
So the
you-
element of luck is also being prepared with knowledge.
Yes.
Knowledge is key. It gives you that extra, of course, that edge. But you also said that it takes a lot of discipline to be a good trader. Anyone can be a trader, agreed?
Yes.
But it takes discipline to be a good trader.
Yes. If you talk anybody become a trader, of course can become a trader. You want to buy stocks, everybody can buy stocks.
Yes.
But do we know which stocks to buy? The question comes there. So if you ask me about discipline, there are two factors that always drive us. One, our fear. Second, our greed.
Greed is the scary one.
So first, when we talk about financial market, let it be what? Stock market, futures market, options, or whatever the financial market. Our fear is there. Maybe it's a pre-installed in us that is a big thing, not for everybody. No, it's a normal, common thing should be talked about everybody. Like what they talk about property market, like what they talk about any simple investment. Even currency market is a simple investment. So the fear, you have to overcome it. Fear of not trying anything will not giving any results.
Perhaps the perception is it's a high risk game. I'm going to put money and then I'm going to completely lose it. Also because the market seems to be hard to understand or complicated. That might be one person's perception.
So now you come to a risk now. Very good. Okay, this must be explained very well. Number one, let's define risk. My way of defining risk is very simple. If you know what you are doing in any field, less risk. If you do not know what you are doing, even how simple thing it is a great risk. So in this financial field, if you want to define risk, do you know what you are doing? Do you get enough training of what you are doing? Then you already minimize the risk. We call this like calculated risk, all these things, what? Minimizing the risk.
But there are factors that will point you towards this risk, point you also towards the fact that, okay, the market might be shrinking, we might be expecting a wave. All this is, there are also factors and signs to help you calculate this risk, right?
Correct, correct. That's where the greed you have to control. There might be a lot of opportunity coming on your way in this market. Just because a lot of opportunity come, is it a must for us to take all? No, our greed you must control. That means you must take as much as you can stand. That means your return must based on your investment, not beyond. Let me ask you something. Some people have cash. They want to buy stocks. They want to keep in the bank in a fixed deposit rate, or they want to keep in our Amanah Saham, Wawasan, let's say. What are the returns?
Minimal.
Minimal 3 to 6%. Our fixed deposit rate is 3 to 3.25. Our Wawasan or whatever the Amanah Saham rate is around 6 to 7%. Mutual fund 6 to 7%. So that is minimal risk. That's all the return. You want a more return, you have to take a little bit of extra risk. Let's say you are looking for 10 to 20% of return in the stock market, that's fair. But you're looking for 100% return, that's not fair. That means you are taking a lot of risk unknowingly, hoping that your greed will be fulfilled.
No fear there, huh?
No. Your fear only comes when you have what?
Lost
you have
all the
lost
money.
all the money.
Well, on that note, we take a quick commercial break, but we'll be back to continue the discussion in the Forex market. Do stay tuned. Hi there and welcome back. Thanks for staying tuned to The Nation. Now our discussion today is all things financials, and we looked at how each and every Malaysian should make that effort to get themselves educated about financial, how to invest, what it means to play certain markets. And today we're looking at the growing financial industry in terms of the Forex market, the foreign exchange. Isabella, before the break, we were talking about the risks involved in Forex. But how does one get involved in trading? What is the process?
Okay. Before you want to get involved in this currency market, the most important thing is you must know the rules and regulations of your own country. Wherever country you are in, you must know. There are a lot of liberalization policy being imposed by this country. That means they are moving towards this trading field. They are moving towards, but very slowly, because they don't want let the people to get into it very fast and then lose all the money and then complaining about it. No, let's read your liberalization policies, know which country you are in, what are the regulations that given by the country. The most important thing is make sure all the trading are done through banking. The right legal way of doing things through banking, and make sure it is your own money. Because you are not a fund managers. Fund managers, they manage people's fund, but you are not a fund manager. We are talking about retail traders, you and me.
That's right.
So let it be your own money, and all the transactions are very transparent through banking.
Are there any people out there who are providing illegal softwares or platforms for the layperson to go and trade? Has that been that issue where there are illegal traders?
There's always there in any businesses. There's always there, because it involves money. But the right thing is to do is, whatever is, you create account on your own name, do transaction through banking.
Through banks. That's the
key word. That means you bank in the money, you withdraw through the money, all the transactions are transparent. That's the right things to do. It's not a third person, you bank in a third person's name, and then a lot of fanky things might go on. So no, let it be very transparent. Then we are very safe on our side. Okay, and then how to get involved? First, get the right educations, please, because this is not a small field. When I talk about 5.3 trillion, it is keep on growing. That means a lot of people are here. You want to know some statistics? 75 million of only US citizens, 75 millions of US citizens are involved in trading. Trading itself.
And would you know how many Malaysians are involved?
We don't have the statistics. Okay, maybe unknowingly they involve, Maybe we are small for this market.
That's right, of course.
As a retail traders, we are small. What we want? Let the market be big. But how much is my portion that I can earn from this market as a consistent income for my life? That's what we want to.
And so the process would involve?
The process will be, as usual, you go through the regulations, you invest small, learn. And the best part of this market trading is we have online trading platforms offered by these brokerage companies. Brokerage companies just a service provider, nothing much. Okay, they just provide services and they take commission from the spread of this market. These service providers, the best part is, before you even trade the real money into the account, you can trade the virtual money.
Okay, like a practice run.
Like a practice run. Why you must involve in something you do not know, but you want to know? That means without your hard-earned cash, you can just practice to understand the behavior of the market.
So you can use this platform to use your virtual money and invest it in real time. In real time.
That's the beauty of this market. That means you are really in the market with not your money. It's a virtual money.
That's safe.
That's we call this insurance for us. That means if you can do well, carry on with your money. If not, stay out of the market. You have the options now. But your greed might not. I wanted you to wait until then. So take your time. Let it be 3 months. Let it be 6 months. Let it be 1 year. So
Right. It's my money after all.
So that's why when we say it's a forex and investment, what we do investments. We do invest in property, we do invest in land, we do invest in stocks. So count certain portion of your investment, put it in this market. Maybe 10%. Don't put all the eggs in one basket, said by Warren Buffett, isn't it? So maybe little. Even not that, do a free practice first. Get involved into it. That doesn't mean forex, learning forex and trading forex is just about this forex. It's about overall of the market. If you learn about trading the currencies, you also have to read what's happening in the price of the metal, because it correlated. What's happening in the stock market of the big stock market of the world, like Dow Jones. What's happening in the S&P 500 market, what's happening in the Nasdaq stock market, because all are interrelated effect happens in the currency.
A cause and effect relationship. It's almost like a big tank if you take an aquarium or the big ocean, where there is some kind of movement here, there will be repercussions somewhere else, right? Very loosely.
Correct. So you will understand the big picture, and then you will involve in the small picture. But people who involve small picture without understanding the big picture of the market, they might not know where are they actually. You must know where
lost
are you.
in the ocean, drowning in that ocean.
And you can't see the land at all. You do not know where to swim actually.
Yes.
So you must know the big picture, then get involved small and slowly. Get a trading, get a training, get educated, because this is like it's another income creating job for you, but not taking a lot of your time. You can do your normal job.
That's right.
Because this market is 24 hours.
So how is it? You open up a portal, the software on a platform, and you then pitch, you put in your money, and you can also control your risk. You can control how much you may lose. You can try and put a cap on that, right?
Yes. Those who are trading, they know things very well. Those who are not, I simply explaining. Let's say you buy a product or metal, stocks of international stocks or currencies, whatever. You want a profit of, let's say, 3 to 4% of that bet that you made. You can also decide the risk of that trade. Meaning, if you buy stocks or currency, let's say currencies, you buy a currencies, and you want to buy it, and you want to see how much risk I can take. So you can limit the risk. In a financial term, we call this stop losses, limiting our losses. You just can put the stop loss there, and you just go and sleep.
That is reassuring, because it's a bit of almost like a safety net. You know that you're not going to lose too much. You don't have to lose sleep over it either.
Correct.
I've set this bandwidth, and that's it.
That's it. That's what makes this market is what more safer, I called it, rather than stocks, because you never know what's going to happen to your stock on weekends.
The Black Mondays. That's the scary stuff. There are also apps now to help you trade in the market. I think there are many apps that I've read about.
Nowadays, at the moment, as the latest studies I read, there are 4,000 brokerage companies offers these apps. We call this online trading platform.
And what that means is that it just makes it that much easier for a person to trade. Of course, the international platform is a standard platform that the Forex runs on, the trading happens on. But to get there, there are many different apps that you can use.
Yeah, there are a lot of apps just featuring many type. The arrangement of the apps are different. But the basic principle is you can trade, you can train yourself, and it's just like happens in a click of a button.
If one wanted to start trading, is there a certain age that they should start? Younger the better, or you can pick it up maybe if a person who's really retired thinking, I might do this in my free time?
Yeah, it's actually like you're filling up your free times. That means the market runs 24 hours. Why 24 hours? It's not like stock market of a country. A country from morning 8 to 5, that's how the stock market, people active trading. But this Forex market involves world. That means when one side of the world is sleeping, the other side of the world are active in business, all this. So it has to run 24 hours unless on Sundays, because all the banks are closed in the world, then it is off. So weekends, weekdays, 24 hours. Within that 24 hours, when are you free to do? I leave it to you. It's just fitting our time that we might waste, like watching a lot of programs which is unnecessary, going out with friends, maybe good purpose, going out with no reason. So we can spend that time productively.
I think that's a great idea. If you could give us an example, what would be a typical day for a normal trader, a layman trader in playing the market, and what are perhaps are the typical returns, the risk and rewards, typically speaking?
Okay, when you talk risk and reward, normally a trader with a very good disciplines can make around 10 to 30%. We are talking about a year annual. This is a long-term process. Okay, we don't want people to speculate the market. Speculation is not that promising the return.
It seems like the Forex market is sort of a slow and steady race. There is no rush. There is no
rush.
Yeah.
So we know that when we buy something, we know this price of this product or price of this metal or price of this currency will be in certain level in a year. We know, because let me give you an example. I know now at the moment 3 to 4 countries are trying to weaken their currencies. Australia, New Zealand, Swiss franc, Switzerland, Japanese yen. Why they are trying to weaken the currencies? Because they have a lot of import and export business. When the currencies are very expensive, it affects the exports. So they are trying to weaken the currency. So we know the information. Why? Not only we, the whole world knows the information. So what we do? We go and bet on this currency, because even their own government and the banks are telling, I am going to weaken my currency. Sell it. They're telling you, sell it. That's where you make money. This is a long-term process. This is how the long-term principle helps us to make Forex as a long-term investment, not speculative market. That's how we make money.
It's interesting. It seems that if one wanted to get involved in learning the process and take up the course, learn to be a trader, how long do you think that timeline would be before they could play the market effectively?
Because earlier I was explaining that there is a training platform. The training platform itself will tell you the results of the outcome of your trading, because it's free.
Yes.
Not your money. You can trade as you like, but you can practice and practice and practice, get the right knowledge until you understand what is this market doing, how we can benefit.
So how is the market currently?
See, this Forex market is very simple. See, it is about 2 countries. Currency market means always in a pair. Currency market is always in a pair, like Euro, US dollar. It's always in a pair. That means if there is an effect in Euro, there is an effect in USD, then the rate change. And if certain currency are too weak, the country come and try to help to maintain the level of it. That means they won't let the currency fall very far from the range that they want. That means there will be always a fluctuations, we call that. When there is a fluctuation, there will be a trend. And that trend helps us to trade and make money. It is not like it's not like why I always compare this stock, because it talks about a company. When the company doing well, stocks goes up. Company not doing well, stocks go down. Who come and help that? No one. But the currency are different. If the currency are not doing well, government help bring it up. It's too strong, government come back again and bring it down. That means somebody have to do something, not letting this currency to have very high margin of fluctuation. They have this range. So when we know how to read this range, that's where we make the money. That's how it works.
It's I think a very, very interesting concept. Now we talked about the risks earlier, but there are also the rewards, and I wanted to touch on that very quickly. But it's time to take a quick break, and do stay tuned. We'll be right back in a quick bit to continue and to wrap up this discussion. So stay tuned. Hi there, thanks for staying tuned. And here we are at the final segment of today's episode of The Nation. We are discussing how Malaysians should have more financial knowledge, and particularly we're looking at the Forex market. Now, my guest in the studio with me is Mr. Balasubramaniyam Sreedharan, who is the founder director of Masterpiece Trainers and, of course, an expert in this area as well. We talked about, Mr. Bala, the risks that involved that are present in the Forex market. But let's look at the positive side. Let's look at the rewards. What are the rewards?
Okay. Rewards. Everybody want to be in this field because of the reward, actually.
That's
now,
right.
This reward, the best part of this reward is unlimited of rewards can be attained from this market. Example, let me say, if you're doing a business in a conventional way, conventional way means, let's say this year you make 10%. Next year, you cannot double just like that because a business just grows slowly. But in currency market or Forex business, if you know how to trade well, if you know how to make a consistent profit, you can just double it the next year. And imagine what will happen, the double it is another year. That means the more experienced you are, the more money you make. In a simple term, the older you are to make more money. But in which conventional business, the older you are not valuable for the business anymore. Only because this business involves your
That's right.
mind, your brain, your knowledge, the experience that you get will give you the return.
And that's a sweet return.
That's a sweet return actually. You are confident about yourself. You don't need anybody to help you when you're getting older. This market will promise a consistent return because you are clever. That is why you can see in the world, the great traders are all above 80, 75, even
Really?
87.
So it does take a few years to fine-tune that art, and of course the rewards get sweeter and sweeter year on year. I guess we could put it that way. People do have a phobia when it comes to the Forex market. They have a lot of, perhaps there are many myths that surround the market and its success. So what do you think these phobias are, and what are the phobias that you would like to slash out?
This phobia comes because every time there is we call this as financial crisis. There's a big things they write in a newspaper. They say the market crash. Nothing happened to the market. Market crash means the value drops. They call a big term market crash. People say, wow, it will crash. Crash, don't worry. It is just a pre-conditioned mind for us. Let's tell me a business that never fails. Tell me a stock that never goes down.
Yeah.
There's no such thing. Business, there's business fail. There is a stocks that go down. There is a market, there is a crisis. It is a cycle. So when we see a cycle, we must see it as a long term, that whatever goes down now will come up later. Now at the currency, our currency is a dollar to 370. We have been a dollar at 380 last time. We have come back here. We will recover this easily. Don't worry.
Really?
We will come back easily.
Words of comfort.
Because when the currency fall, people say, currency fall. No, it don't affect everybody. I see it's a cycle. When you pedal, there's one pedal goes up, another pedals go down. When the currency drop, tourism doing very well. Why? A lot of foreigners will come. Our people might not go foreign because it's expensive. They spend locally. Better still for the economy. So, in one part hit by the values of the currency, another part will increase to balance the economic cycle. So, see it as a long term, not for today or tomorrow and 1 month. So, once you understand this, that means crisis is not something to be scared of, it is something to be lived with. We have to live with it.
Live with it, yeah. Yeah, we look at this field and the market. Why do you think it's grown so quickly? And what is this financial jargon or this term that is used quite commonly? The term leverage. What does this mean?
Okay. Forex, when I say 5.3 trillion USD per day transactions, this market grows very fast because of this term called leverage. What is this leverage? Simple meaning. You want to buy a stock that is 10 ringgit, let's say. You want to buy a stock of 10 ringgit, a unit, you have to pay 10 ringgit. You want to buy 1,000 of that unit, then you have to pay 10,000.
That's right.
That means the real value of the stock, you have to pay the real amount of the money. But in the currency market, there is a system called leverage, where if you have $1,000, let's say you have $1,000, but you are eligible to hold a positions of 100 times of what you have. Meaning $1,000 that you have is capable of holding a position, we call the positions of 1 times 100. It's actually what? $100,000 of value of whatever you want to buy. That means what? It makes you bigger in terms of volumes.
So you have that leverage.
Yes, that means if you have 10,000, you only can buy 10,000 stock. But even you have 1,000, you can buy 100,000 of foreign stocks or foreign currencies. But that leverage will give you an edge. So very hard to understand this, but when you are in this trading field, then you know, oh, this is what happened. Okay, let me put it simple. You want to buy a house, $500,000 house. Do you pay $500,000?
No.
No. Then who paid that?
Down payment, the loan.
The bank. The bank give you, and then suddenly out of sudden you want to sell back the house for $550,000, let's say. The bank give you how much? You bought for $500,000, now you are selling for $550,000. That means you will be only getting that 50. Where the $500,000 gone? What the bank give, take back.
That's
you
right.
get the difference.
Yes.
Same goes this market. We don't buy 500,000 of currencies by giving 500,000. The bank will give.
It's almost like a loan. You can
Almost
say,
like a loan. That's what the loan is leverage here. That means whatever the bank give, they take, and the difference you get.
It is, I think, again, I must say this, that this is very interesting and a lot of things to learn from the market. Before we wrap up today's discussion, would there be any advice that you would like to give to the potential retail traders or those who are already trading in the market?
Okay, those who are trading in the market or who wanted to trade in the market, first thing you must differentiate two things. Number one, market and you. Market doing its job. It has no mercy to anybody and it is no vengeance to anybody. And it has a lot of love for everybody. It is equals to everyone. What difference does it make is your understandings, the projection of your understanding is the market. Meaning, you must be psychologically stable.
Okay, thank you so much for all your time on this show, and thank you so much for sharing all this knowledge, and we hope that you've enjoyed this show as well. It's all the time we have for today. Thank you for watching and have a wonderful day ahead. Bye-bye.
Thank you.